Hello, everybody. I'm Gary Massa with Massa & Associates, and welcome to the first week of June and the first edition of Market Update Monday for the month of June in 2021. Today, we're going to be going over the market recap for the month of May and the seasonality. Is this normal? The last thing we're going to cover today is how high is too high when it comes to our market. With COVID restrictions lifting next week, what you should be looking forward to in the months to come. Stay tuned. Welcome back, and thanks again for joining me. The HomeDex report for the month of May is out, and let's go ahead and dive right into that. As we've been hearing, again, the market is absolutely insane, on fire, whatever adjectives people have been using. But again, the market is definitely moving in the upwards direction, creating some excitement for sellers, some frustration for buyers. But let's help get you the facts so we can move through this. Okay, so basically in the month of May, new listings we had was just over 1,200 new listings, which is down 17% from last year or last May of 2020. Pending sales, we have just over 1,200 units, which is an increase of almost 17% over last May. We have 1,082 closed sales, which is up 72, almost 73% over last year. Now, let me just pause really quick just to give some perspective. Last May of 2020 was just coming or kind of going through the first couple months of COVID, right? We were shut down on the 15th of March. April was a very weird, eerie month. Nobody really knew what to do. We were all kind of stuck at home. Mortgage products were actually going away and being shut down. It was kind of a weird time. May, people started sneaking out of the home and trying to go put offers on houses and see homes. We're kind of getting back to at least showing homes and selling some properties. So that's why we're starting to see that May had a bigger jump than the previous year. But again, the volume and the numbers were just not there for the month of May yet. So stay tuned. Days on market, we're at 16 days on the market right now for the month of May, which is down 48, that's almost 50% of what it was last year. And I think that's a very legitimate number because properties are definitely moving way faster than they were last year. Now, the median price point, which is a category that we look at all the time, it's at $950,000 for a detached home in North County, San Diego. That's just shy of 32% increase from the same time frame last year. Now, last month was $940,000, so it's only an increase from month to month of $10,000. But at the same time, that number keeps creeping up month over month and obviously year over year. The average price of a home, detached home here in San Diego, is just under $1.3 million. That's a 45% increase from the same time last year. Now, this is a number that we're going to talk about in a few minutes right here. Let me get my handy pen. This list to sale price, percentage of original price received, meaning like how much above or below did the home actually sell for once, comparative to the listing. This is just under 105%. It's at 104.9%, which is up 7.7%. So we're going to dive into that category in just a minute, but keep that in mind. Housing affordability is at 40. Again, the lower the number, the less affordable properties are. That's kind of one of the lowest numbers that I've seen in my tenure here in San Diego as a real estate agent. Inventory of homes for sale is at 954 units. That's down 62% since the previous year. And we are just shy of 1 month inventory at 0.8 in terms of month supply, which is down 71%. We're going to dive into those two categories in just a minute as well. Okay, so we're going to take a deeper dive into each one of these here. Really quick, I'm not going to spend too much time on the attached, but I do want to let you know, like, these numbers aren't really taking off as much as the single family detached numbers are in terms of the percentage of growth year over year. But if you're looking for a condo or an attached home, there's even less inventory. That's 0.7 months, which is down 68% comparative to the previous year. So let's talk about market seasonality and is this normal? There's a few things that we can see the trends. Again, during like May, June, July, those are typically like our highest price points, our highest closed sales and pending sales and inventories and new listings just because of the market seasonality, right? And so what these red lines represent right here is that's May. Okay, so I know it's hard to see the smaller fine print on the screen, but every May you'll see that it kind of peaks out in new listings And then it steps down and steps down as it's getting into the latter months of the year, right? And getting into fall. Same thing in 2018, same thing in 2019. 2020 May, obviously we were in COVID, so it went sideways into June, and then it ramped up and came back down towards the end of the year with lowering the new listings, which again, not seasonal. This is a little bit off, but it was COVID, right? But now this year, May is here. We actually, this was April, and then May, we actually have less new listings in May, which isn't exactly seasonal for our markets right now. My thought is that a lot of people, sellers rather, don't have a place to exactly go. So it's hard for them to find the right place, you know what I mean, in terms of then listing their home. So I feel like that's driving a little bit of that shortage. Getting into pending sales, right now we're at 1,211 pending sales. That's up 16%. Now, last month, April, compared to April 2020, that was an 85% increase. That was huge. And obviously, no one was really buying any homes in April. So I kind of want to squash that number and get back to May being 16% above last year. That makes a little bit more sense, a little bit more logical. Getting into closed sales, as you can see, we kind of peak out in May every single year in terms of closed sales. June and July are actually typically a lot of our higher months as well. Not that the sales are actually made, but they actually closed in. So go back 30 or 60 days. But again, right now we're actually still lower, in terms of the chart here in terms of number of closed sales. Okay, we're at 1,082, which is 72% above last year. But again, we're still lower than the last 3 months in terms of number of closed sales. Days on market, again, we're at 16, which is just under 48%. We're going to skip over here to the median price point. Obviously, we're looking at this number a lot. So keep in mind this number when we have the conversation is how high is too high, and that's going to come in just a minute. But we are at $950,000 for a median price point of a detached home here in North County, San Diego. That's up 31.6%. Again, that's a big number, $10,000 over what it was last month to month. So not a big jump month to month, but again, this is a big jump from June when it was $699 June of 2020 in COVID. But this is what I want you to see kind of coming out of COVID now that we're all kind of opening up here. June of 2020, the median price point was $699, and that was a 4% lower or decrease from the June of 2019 rather, right? And so since then, we had July of 2020, which was a 9.7, almost 10%, but just under that double digit year over year price growth. And since then, all of this is like in the teens, double digit growth month over month. And now the last, this month and last month was 31 and 32%. We're down just a little bit in terms of, percentage growth each month, but again, still higher in the number. But every single month, you've had a higher percentage gain month over month comparison to the previous year, which tells us that there's just like kind of a runaway train in terms of pricing. So we're going to talk next about how high is too high. This is the average price point. Like I said, it's at a million, just under $1.3 million. Percentage of original price received. Right now, as I mentioned before, we're at 104.9% above list price on average, which is a very big number. Some cities or some zip codes are actually at 110%, 108% above. So, some of the hotter markets, but on average for North County, that's still a very, very big number. And as you've noticed, back in July of 2020, it was 97%. That's been pretty normal, in terms of the list price to sale price percentage. In my experience over the last 15 years, it's been around 97%, right? But now it's grown and gone up every single month for at least the last year. And we were at 97%. Now we're at pretty much 105. So everybody's been asking, how high is too high? Like, how much do I offer? This is always the number that I go back to in certain areas. Like, let's see what the market's doing. What's the average of people who are actually, spending above list price? But when people ask me, like, when is this going to stop? How do we know that the market's correcting or the market's, changing? Because realistically, we never know that until it's in the rearview mirror, right? And then we see that there was maybe a correction. I'll get into my thoughts on how the market may shift. But in terms of this conversation right here, I think this is the number one, as well as median price point, maybe number one or number two indice that we should be looking at to kind of monitor the market for it leveling off or changing in any way? My opinion is that when this number, the list price to sale price ratio, levels off from month to month, or maybe takes a step down, we may have got to the ceiling when buyers are like, I feel like this is too much, right? So how much higher can it go? How much more buying power is behind those crazy numbers and the prices going up that fast? That's what I cannot tell you, but we can look at the numbers, right? And when the numbers tell us that there's a leveling off, and maybe we see 2 or 3 months in a row, that's when maybe we'll start to see the shift, or at least things leveling off so the market can catch its breath and get on that next run, okay? So housing affordability, we talked about that briefly. Inventory for homes for sale, again, we're at 954. Now this is 2,400 units up here. This is 954. This is the lowest that we've seen in at least over a year. And this is the lowest that we've seen since, that's January of 2013 number of units. And if you guys remember, that's kind of coming out of the last pandemic that we had with the mortgage meltdown crisis. But that's 62% below what the inventory levels were last year, which is huge. I mean, look at 2019. We had 3,600 homes for sale. We've got 954 now. That's a huge difference in just 2 years' time. Even a bigger difference just between 1 year's time. But still, you can see the progression of our inventory levels just eroding. And that's what's causing most of our, the demand to soar, just because there's no supply. Again, we're at 0.8 months of inventory. That's down 71.4%. Now, again, these last couple of months here, even though it shows 1 month and 1.1, in the last reports that I've given you, and I've seen that those have actually been at like 0.9 and 0.8 themselves. According to the HomeDex people, they do some recalculation. Those numbers are still coming in and they make some adjustments in the later months. So I've been told. But anyways, it does look like we're still at the lowest point of month supply of inventory that we've seen in a very long time. We were at like almost 3 months of inventory back a year ago, which is way more normal. So we talked about how high is too high, what to expect next. While we're on the topic of inventory, everybody's asking what to expect next now that COVID restrictions are being lifted next week and life is going back to normal, whatever that is exactly going to entail going forward. But here's my thought on what to expect in the next 6 months now that COVID restrictions are lifting, and it does have to go in with inventory. Now, again, keep in mind that a normal market is like 5 or 6 months of inventory. That's a normal weighted market. Obviously, we are far from that at under 1 month of inventory, so we can really use a lot of inventory here in this market. And it'd be interesting to calculate what that number of inventory would be to get us to at least 3 or 4. Like, I know the national number, but San Diego, I don't know. So I'm not even going to speculate right now. But what I see happening with the June 15th date lifting, I was aware that last week there was a law passed that there was going to be 2 more months before a landlord or a bank could enforce an eviction or a foreclosure on different people to get them current, whatever the case. But the point is that I feel like in the coming months, the inventory levels that we're going to see are landlords mainly that have, maybe they've owned 5 or 6 or multiple homes, and they're just going to take some of it off the table. Maybe some didn't perform. They sat through a really challenging time to be a landlord where maybe their tenants were or were not paying. They could not get those people out and or get somebody in that would pay the mortgage. Again, no right, wrong, or indifference. I'm just kind of stating the facts here. And I feel like those landlords, now that those people the tenants may be moving on in one way or another, will be selling those properties, whether on or off market. But I feel like a lot of institutional investors are going to be picking those homes up just because of the condition levels or whatever the case, fixing them up, and it's going to come back on the market as a more of a luxury move-in ready home at kind of a higher price level. Additionally, we'll probably see some levels of foreclosures that will also come back on the market, fixed and flipped, if you will, as really nice move-in ready homes, also keeping the pricing higher. But keep in mind, over the last 10 years, like mortgage underwriting was so much more, so much more intense in terms of like making sure people qualified, right? Like we didn't have people in with 0 down that couldn't qualify for the loan. So and those people also have experienced a vast amount of appreciation over the last many years, even over the last year. So think about that. There's so much equity in our markets right now. Even if somebody, a homeowner, was not able to pay their mortgage, unfortunately, over the last year due to circumstances with COVID, they realistically probably still have equity in their home. And even though it's in default, they're not underwater. So I do see a lot of those homes coming up as not a distressed sale, but basically like a regular market sale where the seller will still be able to capture some of the equity of the home. So that would be a standard normal sale in our normal market, right? So I feel like those are going to be like the three types of inventory that we're going to see coming up, probably starting since that stay is going to be lifted. I think it was August 15th, probably in the third quarter and or fourth quarter of the year. The last set of inventory that I see coming to market are the people that just haven't felt comfortable having other people in their home, whether or not now that the vaccine levels and that the emergency order is lifted, they now feel more comfortable at having people in their home and listing their home for sale, and that they can move and just, experience the rest of the world or be out and just cross paths with people, that I feel like those homes will also be coming to the market. So I do see some inventory coming to market in the near future. Again, I don't think near enough that we need to level out the market, but it will definitely feed the demand that's there right now and at least try to help some people who seriously want to get into a new home have the opportunity to do so. So that's all we can really hope for going forward. Again, if you guys have any questions, please let me know. I hope that this information was helpful and valuable to you. I know that we go a little long here, but as you can see, I'm passionate about it and I love to share the information. So if you have any questions, let us know. Make a comment below. Give me a call directly. Until then, I'll see you next week on our Market Update Mondays. Thanks.